Hello, Trade Pros. It's Victor from Trade Pro Academy, and we've got yet another YouTube video for you today. And in today's video, we are going to be talking about the most profitable support and resistance strategy that we use on a daily basis, that I use personally in any market, whether it's Forex futures, stocks, crypto, whatever you can name, you can use this strategy. Now, before we get started and I share these Trade Pro secrets with you, if you guys like what we do and don't want to miss any more educational videos, hit that subscribe button down below, ring that little bell to notify you when we do go live every single morning on our market updates, and like this video, comment down below, what do you want to see next? Now let this intro run and we'll get started with this top secret strategy. So in today's video, we are going to be talking about one main strategy that has two parts to it. This is a support and a resistance strategy based on the market structure and a trending market. Now, in a trending market, whether it's a bull or a bear, you either see higher highs and higher lows, or you see lower lows and lower highs. Now, in this strategy, what we're going to do is identify support and resistance structure in a very systematic way in order for you guys to identify those high probability trades. So the basis of this strategy is the 1, 2, 3 wave movement pattern. So 1, 2, 3. So one wave, two waves, three waves, and on the break of the third wave, you look for a rotation down. Now, this is a very, very simple component to the strategy in that you're waiting for a higher high and a higher low to occur in the bull market and wait for the break of that third wave and then retest of that third wave. So if we jump down into what is the example right here, the Euro USD, we'll find a few examples of that. So let's just move it down into here. This is a daily chart on the Euro USD, and it's very, very simple. It can work to either way, either the upside or the downside, right? So if you get a 1, 2, 3 pattern, ideally you're waiting for the third break of this pattern and the retest. Now let's see it actually work out. 1, 2, 3. This is the third break right here. This is the third level that you guys are watching for. And what happens? You finally break it here, you retest it here, and you get the continued move lower, right? You can use this in any trending market. So again, 1, 2, 3. What you're doing is waiting for the break over here and the continued move lower. So you get one chance, two chances after this continued break for ideally a push to the downside. Now, there is another component to this trading strategy rather than the 1, 2, 3 wave, and that is support turning into resistance or resistance turning into support. Now, if we identify that, so where are some of these key support levels, right? If you map it out, you can see it's pretty evident a key support level is somewhere here, crudely drawn. So let's just go ahead and use one of these tools. Now, if I just grab this and move it down here, you can see that this is a pretty strong support level. It tests it twice, and you could use the 1, 2, 3 pattern to identify where this move may go, right? So once we break this third wave, what happens, this support structure actually turns into resistance structure, and you can identify the moves lower. Now, the support turning into resistance is very, very pivotal in this strategy and in a lot of trend trading strategies. Now, a lot of people might think the trend is not your friend, but the trend works until it doesn't, right? So how do you identify the high probability trades based on this 1, 2, 3 or support and resistance flip strategy? Now, this is super high probability strategy because you have to be super patient and wait for these levels to be broken. And I don't mean by just a few ticks, a few pips, a few cents, but a convincing move. So maybe not this one, but maybe this break right here, and you get the rotation back down for the continued possibility right into that direction. Now, obviously, it works till it doesn't, right? But once you break that structure, you have a new support zone, and what you're waiting for is another move. 1, 2, 3. Now, when we break this wave, this support structure right here, what we're doing is we're waiting for price to continue lower, right? When we continue lower, if we manage to break this area right here, we'll look for shorts for the continued move down until this structure changes. And where will this structure change? At one of these key resistance levels, depending on where the impulse starts, depending on your time frame and your analysis, depending on your trade trade and trend analysis. So if the downside is to continue, we want to see lower lows, lower highs. This could be flipped to the upside and looked at a bull market, but a very, very key pivotal thing in this strategy is looking for extended wicks to fail at those levels and a lot of rotations. What I mean by rotations is candles printing side by side, rotating at a level, telling you that there is a fight here and the buyers can't really take it much higher in that direction of the trend, but the sellers also are struggling. But since it's in the trend, in the direction of the trend, they do have the upper hand. You can see that very, very clearly in this example right here after this support break from that 1, 2, 3 pattern. And next thing we're looking for is a break from this area, continued rotations into that area, and a drop. Now, if we look at the same pattern on a more of a bull trend market, let's just zoom out. We'll probably find a bull trend somewhere here on the Euro USD, and there we go. So if we use the same pattern right here, we can identify one of these moves. So 1, 2, and then 3 ideally break somewhere above this resistance point, right? And this resistance point should ideally turn into a support zone and hold out that structure. Now, there are a few tests of the structure, but you can see the breakdown of the structure and the continuation lower. Now, what do we not get here? First of all, we don't get the evident retrace of these broken resistance points and retest into them. We do, but they're all the way up here. Do you really want to risk it when it's really moving up and not really a part of the strategy? Maybe not. And then it finally comes down into the broken wave level, but what do we get here? The difference between the bear structure that we saw and this bull structure is there are no rotations, so it's not very clear that you really want to enter this. Remember the rotations, like quantify as sideways movement in that candlestick pattern. Do we get that here? No. So let's look for another one that may work in the bull situation. So one might identify maybe this 1, 2, 3 pattern right here. Once we break the third top, you can get maybe a rotation. Again, it doesn't quite come down into that structure area, but what you do get is a resistance channel turn support based on that same wave pattern, and this time you do get the rotations for the continued move higher. This can be applied to pretty much any asset. If we just grab a random stock here, let's say Apple, you can identify the same patterns in the bull or bear market, right? So a little more extended move, let's say in this bull move, 1, 2, 3, and you have your 3 waves right here before it does actually drop off a little. Where do you want it to break? You want this resistance right here to turn into support. There's your support structure. You get a lot of rotations for the continued move higher. Where's your target? Maybe this level where the previous all-time high was, or maybe trail some more. So the idea behind this, how to manage the risk and reward of this trade idea, right? So you have your resistance point right here. You have your support block that turns into a potential trade idea. So if we just grab this somewhere here, you can see this the 1, 2, 3 wave pattern. It drops off slightly. This is a very, very key component of that. You want it to drop off slightly on the third wave and then finally break that wave, rotate back down, then you get those rotations. The entry should be somewhere at the bottom of the rotations or the broken peak higher with a stop just below that, just below where those rotations start, just below that previous peak higher, because if it does come down there, that doesn't confirm the structure will continue, and instead you can see the bull run does happen. Now, this is a very, very pivotal trading strategy, especially when it comes to market structure, following the trend and identifying those levels. So in the trend, you want to see higher lows, higher highs if you are to the upside, and those resistance channels turn into support levels for these continued moves higher. Again, the 1, 2, 3 keeps you out of the nonsense moves, especially with this drop on the third wave, and then the break of that third wave coming down into that support structure that was recently formed based on resistance. This could also be used in futures, day trading, swing trading, whatever it may be, and we use this every day on a daily basis. Now, I hope you guys really, really enjoyed this super profitable trading strategy. This is Victoria from TRADEPRO Academy, and I want you guys to comment down below what you thought. If you have any more suggestions, what else do you guys want to see? Go ahead, give this thing a shot, practice it a lot before you actually implement it, and keep that risk tight. Drop a like, hit that subscribe button, and notify that little bell to tell you when we do go live every single morning for our morning market update. Take care, guys.